If you're receiving the state pension in the UK, what I'm about to reveal in the next 60 seconds could directly impact every payment you receive throughout 2026. Right now, thousands of pensioners are being fed misleading information about when their payments will increase, how much they'll receive, and what actions they need to take. The confusion is widespread, the misinformation is rampant, and the consequences of getting this wrong could mean missing out on money that's rightfully yours. I've spent hours breaking down the official government announcements, cross-referencing the numbers, and separating fact from fiction so you don't have to. By the end of this video, you'll know exactly when the increase takes effect, precisely how much you should expect, who qualifies for the full amount, and the critical detail about additional benefits that most people are completely overlooking. Stay with me, because this information is time-sensitive, it's accurate, and it could make a real difference to your financial situation in the coming months. Welcome back to my channel, where I'm dedicated to bringing you clear, accurate, and trustworthy information about the issues that matter most to your financial well-being. If you're new here, this channel exists for one reason only: to cut through the confusion and give you straight answers about pensions, benefits, and financial changes that affect real people living real lives. I don't deal in clickbait, I don't spread rumors, and I certainly don't waste your time with sensational headlines that turn out to be empty promises. What I do is simple. I take complex government announcements, I break them down into plain English, and I deliver the information you need to make informed decisions about your money. Today's topic is one of the most searched and most misunderstood issues facing UK pensioners right now: the confirmed state pension increase for 2026. The announcement came through in December 2025, and almost immediately, social media exploded with confusion, contradictory claims, and outright false information. Some posts claimed pensioners would see increases in their December payments. Others suggested special one-time bonuses were being distributed. Still others threw around weekly payment figures that simply don't match the official numbers. It's created a perfect storm of confusion, and I know many of you have been left wondering what's actually true and what's complete nonsense. That's exactly why I'm making this video today. I want to give you the definitive, fact-based explanation of what the government has actually confirmed, when the changes take effect, how much you can expect to receive, and what you need to do to ensure you don't miss out on anything you're entitled to. Before we dive into the details, I want to ask you for just one small favor. If you find this information helpful, if it clears up confusion or answers questions you've been worrying about, please take a quick second to hit that subscribe button. You're not doing it for me, you're doing it for yourself, because subscribing means you'll never miss another update on topics that directly affect your income and your financial security. This channel is built for you, and every video I create is designed with your needs in mind. Now, let's get into the facts. The UK government has officially confirmed that the state pension will increase in 2026, and this confirmation was announced in December 2025. However, and this is where the confusion begins, the announcement in December does not mean the payments increase in December. This is absolutely crucial to understand, because many pensioners saw the December headlines and naturally assumed their next payment would be higher. That is not how the system works. The increase does not take effect until April 6, 2026. This date is significant because it marks the start of the new tax year, and historically, all state pension rate changes in the UK are implemented at the beginning of the tax year in April. This has been the standard practice for years, and it's tied directly to the mechanism that governs how pension increases are calculated, which is known as the triple lock. Let me explain the triple lock in clear terms, because understanding this system is essential to understanding why the increase happens when it does and how the amount is determined. The triple lock is a guarantee that was put in place to protect pensioners from losing purchasing power as the cost of living changes. Under this system, the state pension must increase every year by whichever is the highest of three measures. The first measure is inflation, specifically the Consumer Price Index from the previous September. The second measure is average earnings growth across the entire UK workforce. The third measure is a flat rate of 2.5%. The government looks at all three figures, identifies which one is highest, and applies that percentage increase to the state pension. This system ensures that pensions don't fall behind either rising prices or rising wages, and it provides a minimum guaranteed increase even if both inflation and wage growth are low. So when the government made its announcement in December 2025, what they were actually doing was confirming that the triple lock calculation had been completed for the upcoming financial year. They had reviewed the relevant economic data, determined which of the three measures was highest, and locked in the new rates that would apply from April 2026 onward. The announcement itself doesn't trigger an immediate payment increase. It simply tells pensioners what to expect when the new tax year begins. This is why any claim that payments would rise in December or that special bonuses were being paid out before Christmas is completely false. Those claims are not based on any official government policy or announcement. They are either misunderstandings or deliberate misinformation designed to generate clicks and views on social media. Now let's talk about the actual numbers, because this is what everyone really wants to know. According to the official figures confirmed by the government, the full new state pension will rise to approximately £241.30 per week. The full basic state pension, which applies to people who reached state pension age before April 2016, will rise to approximately £184.90 per week. These are the headline figures, but it's absolutely vital to understand that not everyone receives the full amount. Your actual weekly payment depends entirely on your national insurance contribution record. If you have gaps in your record, if you spent time out of the workforce without receiving national insurance credits, or if you didn't pay voluntary contributions to fill those gaps, your payment will be proportionally lower. This is why I always encourage people to check their personal state pension forecast. You can do this online through the official government website, or you can request a statement by post. Your forecast will show you exactly how much you're currently on track to receive, how many qualifying years you have, and whether you have any gaps that could be filled by making voluntary contributions. In some cases, buying additional qualifying years can boost your future payments significantly. Though this isn't the right option for everyone and depends on your individual circumstances. The key point is that you shouldn't assume you're getting the full amount just because that's the figure you see in the news. Check your own record and base your financial planning on your actual entitlement. The April 2026 increase applies automatically to everyone receiving the state pension. You do not need to apply for it, you do not need to fill out any forms, and you do not need to contact the Department for Work and Pensions to request it. The DWP will adjust payments automatically, and the higher amount will simply appear in your bank account as part of your normal payment cycle from April 6th onward. However, there is one critical thing you must ensure, and that is that your personal details are up to date with the DWP. If your bank account details have changed, if you've moved house, or if any other key information is outdated, it could cause delays or complications in receiving your payments. Make sure the DWP has your current information, respond promptly to any official letters they send, and keep your records organized. Another important aspect of this increase that many people overlook is how it affects pension credit. Pension credit is a benefit designed to top up the income of older people who are on low incomes, and the qualifying threshold for pension credit will also rise in April 2026. This is significant because some pensioners who currently earn just slightly too much to qualify for pension credit may find that after the state pension increase, they're still below the new pension credit threshold and can now claim it. Pension credit is not just about extra weekly income. It's also a gateway benefit that unlocks a range of additional support, including help with rent, council tax reductions, cold weather payments, and for those over 70, a free TV license. Many eligible pensioners don't claim pension credit because they either don't realize they qualify or they assume the application process is too complicated. The truth is that checking your eligibility is straightforward, and if you're entitled to it, claiming can make a substantial difference to your overall financial situation. Let's address some of the most common concerns and misconceptions that have been circulating online. First, there is no special one-time payment being made in December 2025. There is no £500 per week pension being rolled out. There is no Christmas bonus linked to this announcement beyond the standard Christmas bonus that eligible pensioners receive every year, which is a separate, long-standing payment of £10. The viral posts claiming otherwise are false and should be ignored. These posts are typically designed to generate engagement through shock value and misleading headlines. They are not based on official sources, and sharing them only spreads confusion. Second, your payment dates will not change because of the increase. If you currently receive your state pension on a Monday, you'll continue to receive it on a Monday. If it comes on a Wednesday, it will still come on a Wednesday. Your payment day is determined by the last 2 digits of your national insurance number, and that system remains unchanged. The only time payment dates shift is when they coincide with bank holidays, in which case payments are made earlier to ensure you're not left without funds over the holiday period. Third, let's talk about tax. The state pension is taxable income, but it is not taxed at source before it's paid to you. Instead, Revenue and Customs accounts for your state pension when calculating your overall tax liability. If your total income, including the state pension, any private pensions, part-time work, savings interest, or other sources exceeds the personal allowance, you may owe income tax. The current personal allowance is £12,570 per year, and this threshold has been frozen until 2028. If the state pension increase pushes your total income above this threshold, you'll pay tax on the amount that exceeds it, but this is handled automatically through your tax code. You don't need to panic or take immediate action. Just keep an eye on any correspondence from HMRC, and if you believe your tax code is incorrect, contact them to discuss it. It's also worth understanding the difference between the new state pension and the old basic state pension, because this is another source of confusion. The old basic state pension applies to anyone who reached state pension age before April 6, 2016. These individuals receive a lower base payment, but they may also receive additional components such as the state second pension or SERPs, depending on their work history and whether they were contracted out of certain schemes. The new state pension, introduced for people reaching pension age from April 2016 onward, is a single-tier system with a higher flat rate and no additional components. Both systems increase under the triple lock, but the actual amounts differ, which is why you'll see 2 different sets of figures in official announcements. Make sure you're looking at the right figures for your situation. If you're unsure which system you fall under, check your state pension statement or contact the pension service for clarification. One final point that I think is really important, especially given the cost of living pressures that many pensioners continue to face. Even though the state pension is increasing, it's worth taking a realistic look at whether that increase will fully offset your rising expenses. Energy costs, food prices, and housing costs have all increased significantly over the past few years, and while inflation has stabilized somewhat, prices remain higher than they were. An increase in your pension is helpful, but it may not cover all the ground you've lost. That's why it's so important to review your budget, explore what additional support you might be entitled to, and make use of free advice services if you're struggling. Organizations like Citizens Advice, Age UK, and local welfare rights services can help you understand your full range of entitlements and ensure you're claiming everything you're eligible for. Planning ahead is key. Take the time now, before April arrives, to calculate what your new weekly or monthly income will be. Write it down, compare it to your regular expenses, and identify any gaps. If you're borderline for pension credit or other benefits, check your eligibility again after the increase takes effect. Small amounts of extra income can sometimes make a big difference, especially if they unlock additional forms of support. And if you're feeling overwhelmed or unsure about any of this, don't hesitate to reach out for help. There are people and organizations whose job is to support you, and there's no shame in asking for assistance when you need it. So, to wrap everything up and make sure we're all on the same page, here's what you need to remember. The state pension increase confirmed in December 2025 does not take effect until April 6, 2026. That is when you will see the higher amount in your bank account. The confirmed figures are approximately £241.30 per week for the full new state pension, and approximately £184.90 per week for the full basic state pension. Not everyone gets the full amount, so check your personal forecast to know exactly what you'll receive. The increase happens automatically. You don't need to apply, and you don't need to fill out any forms. Just make sure your details are up to date with the DWP. Pension credit thresholds will also rise, so check your eligibility if you're on a low income, because claiming it could unlock significant additional support. Ignore viral posts claiming special bonuses or immediate payments in December. They're not true, and they only create unnecessary confusion. Your payment day won't change. Your increase is protected by the triple lock, and if you have questions or concerns, use official sources like the government website or trusted advice organizations. I hope this video has given you the clarity and confidence you need heading into 2026. If it helped you, please give it a thumbs up, share it with anyone else who might benefit, and don't forget to subscribe so you never miss another important update. I'll continue to cover this topic as more information becomes available, and I'll always be here to give you the facts without the hype. Thank you so much for watching. Thank you for trusting me with your time, and I'll see you in the next video. Take care, stay informed, and remember that knowledge is power, especially when it comes to protecting your financial well-being.